Hey, welcome to another session of Unlocking VA Loan Success. And today we're going to talk about VA loans and using or financing outside the box properties. So we're going to talk about things that we get questions on all the time. It's not just a loan for a regular, just single family stick built home. It's for other things as well. And we're going to talk about some of the little known benefits that you can experience with properties by VA. And so we're going to talk about farm residences, which is not just farms, anything with a lot of acreage, because there's a lot of lenders and banks that add extra guidelines to this and say this isn't possible. So that's an important one. I've written several articles on this as well. Manufactured homes, VA will finance those. Condominiums that are approved, and then escrow holdback for VA appraiser required repairs. So let's get moving forward. So we're going to talk first about farm residences. These can be, most commonly it's horse farms. It can be, a house with a lot of acreage. It can have, the fencing type. I had one that was referred to us on the day before closing. It was denied because the lender said, well, it's got all this fencing around all the acreage and it just looks like a farm, so we can't do that. Uh, that is not a problem. So we closed it, VA, no problem. It's a VA cash out refinance actually to pay off a bunch of debt. It can be, working farm. It can be a house with just a ton of acreage. So there's a lot of different things that this can be just an amazing thing. Because often, say if you go to a farm credit union, which are great places, they're probably going to require a good 20% down or more. But if you're a military veteran, you can take advantage of this awesome product to finance something that many say you can't do. And but the key point about this is it needs to be a residence. It can't be, hey, I live down the road and here's my big old commercial farm. That's not VA. VA is, look, we're going to live in this property as a primary residence, and it may have some really awesome $1 million building on it that's for horses to walk around in or something. Can't give it commercial value like that. Appraisers are instructed when they appraise a farm residence is to look at everything with residential value. So a big old building like that will be looked at as an outbuilding or a garage or something like that. We've even closed some before where there's an additional dwelling on the property where it's a guest house. If I remember right, we had once a couple thousand square feet main residence and then about an 800 square foot guest house. I mean, it's all important on the appraisal, of course, but that was allowed and closed. And then no acreage limit. VA, you hear it all the time. I'll have plenty of say, well, I know you can't do finance over 5 or 10 acres for VA and all that. So that's not true. That is, again, adding guidelines on top of VA guidelines. VA does not have a limit on that. Now, the VA appraiser normally is not going to appraise a property that has 20 acres and compare it to all half-acre lots with houses on it. They're going to want to try to get comparable sales that have extra acreage on it that are comparable. So, support that value and support that the acreage is normal. There are areas in North Carolina, for instance, like Pender County, Moore County. I mean, horse farms are just prevalent, and it's very, very common. So you have a lot of comparable sales that have such properties. And then typically these are large loan amounts. And don't forget, as we talked in an earlier episode, that VA has no loan limits when you have full entitlement. So if you have a property that's $1.5 million and it's this awesome farm residence with 25 acres, big old house and all that stuff, the fencing and rolling hills and the barns and all that stuff, VA could possibly finance that. No money down. And let's say on top of that, someone receives VA disability income, no, or a Purple Heart recipient, no VA funding fee. So 100% financing, no PMI, no funding fee. And then let's say you get even more creative. the seller can pay all the closing costs, can pay the prepaids, first year of insurance, setting up escrows, and even on something like this, 4% of the price can be paid in sales concessions, which can go towards the prepaids after the seller's already paid all the closing costs, and even pay for a golf cart, appliances, paying off debt, all kinds of things. So when you get into higher prices, you can get very creative too, because a little more often a lot of more room to pay for things. 4% of $1.5 million is a lot, so you can do a lot of things with that. So think of that for if you're selling a property. If you're a listing agent and looking for creative ways to find financing for this, it just seems that a lot of people that have been in the military really like to have that land spread out, get away from everybody, and have something like this. So it's a great place to market to. If you're a buyer's agent, again, these are large amounts and great sales, great clients. And of course, if you're a military veteran in the military, it's a great thing. So reach out for us on the farm residences or properties with the acreage, and you'll find there's some amazing results that can come from that. Then manufactured homes. Now, we do not finance single wides. Now, some lenders do, but double wides only. And keep in mind, these are different than modular homes. Modular homes, we can finance as well, but double wides are considered manufactured homes. They have a steel frame underneath them, and but there's no down payment if someone has enough entitlement through VA. And so that's nice. Basically, for manufactured homes, just for your knowledge, we can finance them in VA, FHA, and conventional. But there is a requirement that they must have been built on or after June 15th, 1976. I had to look up that date. I always say sometime in mid-76. And the reason why is new guidelines came out, requirements for manufactured homes to make sure that they follow certain guidelines for quality. And then foundation certification. If you're getting an FHA or a conventional loan on a manufactured home, we have to have a structural engineer foundation certification, make sure everything is done correctly, tied down sufficiently, et cetera. And on our VA loans, we only require this if the appraiser says it's needed. So if the appraiser, mentions that the foundation appears to be adequate, that's normally fine. If they say, hey, I'm not qualified, or hey, I'm not sure about this, needs to be checked out, then the foundation certification needs to be done. But manufactured homes these days, that is the affordable housing. So you can get, usually lower prices, things like that. So keep this in mind that VA will finance manufactured homes. Condominiums. This is low maintenance living, because someone's going to take care of all the grounds and everything outside and all that stuff for you. And so, it's just easier if you're looking for something like that. It must be an approved complex. I'm asked often about if a certain condo complex is approved with VA. There's the website right there you can go to, and that is something where you can search for approved condos. Now, it is a finicky little web page. So what I would suggest is, if, for instance, if you're looking in Fayetteville, go by Fayetteville first. And then if you're not seeing the condo complex on there, and look really good, because sometimes the name can be just a little off of what it really is. You might have to research a little bit, but let's say it doesn't show up. Then take Fayetteville out and look up Cumberland County. You'll find that some show under the county, some show under the city. Don't know why, but this is just the way it is. So just so you don't miss one, but it must be approved by VA. Now, if you're a realtor or just, you're head of an HOA for a condo complex and you're wanting to get a complex approved with VA, then it's a pretty simple process, and their turnaround time varies. It's been over the years sometimes as quick as a couple days, and for an approval once we submit it, to over a month. So it just depends on their turnaround time when you submit. But if you need help on that, that's something that we can assist with. And in the past, we've been able to get many approved by first time submission. No steps required after that. So that's nice. There are no condo tails allowed. These are condo hotels. They're the more the beach properties that have the check-in desk and all that stuff like that. So they're not looking to approve condo tails. And then if anybody, one entity or person owns more than 10% of the condos in the complex, then VA is not going to want to deal with that. Now, it's not mentioned on here, but the condos do need to have sufficient insurance, and so that's always important on any type of loan. You want to make sure that there's enough condo master insurance policy coverages. Okay. Now, escrow holdback for repairs. Most are familiar with, when you get an appraisal back, whereas VA or any other type, the appraiser may say, hey, here's the value, but it's subject to these things being fixed that need to be done to meet VA condition requirements. And on our prior webinar, we had, a lot of those things that are commonplace. And so we will allow for escrow holdback for appraiser required repairs. It's not for something like, hey, I want to paint this wall that's purple. I want to paint it white. It's not that. It's the appraiser says, hey, this handrail is loose right here. And let's say that it just can't be fixed in time. That's not a good example, but it can't be fixed right now because of the weather. That'd have to be some pretty serious weather to not have a railing fixed. But anyway, we will allow this on new construction for weather-related delays. New construction home, it's all finished, and just, hey, there's just a weather delay and we can't get blank fixed in time and we need to close. Then that may be able to work. Let's say for easy numbers, the amount of the repair is $2,000. Then we will hold 150% or 1.5 times the amount of the contract for the work to be done. And so we can hold that seller's money. And so in this example, if it's $2,000 cost, we would have $3,000 held back. After it closes, the contractor goes out there, finishes the work, submits that to us. We get the appraiser back out there. They verify that it's all completed. We get a final inspection report. We're all good. Then we can instruct the closing attorney to release the funds to the contractor. Let's say if it came back at exactly $2,000 in the end, then the extra $1,000 goes back to the seller. That's a contingency just in case the seller gets in there, the contractor gets in there and finds out, oh my gosh, there's a little more than I thought and all that. But it's minor repairs. It can't be, well, we haven't finished putting on the roof yet, so let's close. It's minor things. Now, this says new construction on a case-by-case basis. If it's an existing home, it's just like, hey, this window's been ordered and it's going to be in a week, we got to close, or something minor, just minor things that can be fixed real fast after closing and at small amounts. Ask, but no promises. It's a case by case. So these are the items that we had planned to discuss today. If you are a realtor, as I mentioned every week, be the expert, educate, communicate, and be the resource, just like we want to be. And while we're doing this, we want to share and educate others, whether you're in the military, a veteran, surviving spouse, realtor, financial advisor, builder, anybody. Just someone that works with veterans and really want to understand how much a VA loan can do. It's not just plain old boring, VA loan, 29-41 debt ratio and all that. It does so much. And again, we say all the time, it's the best loan in America. So, know what to look for in a viewing, have your team together for success, know the insurance agents, the contractors, your home inspectors, things like that, that when you have a property for VA or anything else, you're able to move quickly and not have to go, oh, shoot, who do we get for a structural engineer inspection, things like that. So if you have questions, of course, ask us. We want to be your resource for VA and all types of mortgage loans. So any questions, please ask. If there's any questions right now, I'll go ahead and answer them. If not, I want to remind you of next week's webinar, and we're going to get creative for VA buyers and sellers. Even though we're a mortgage company, I'm telling you, we have a lot of things that can help sellers move properties as well. Okay. We're going to talk about our VA buy then sell. That's where someone can buy a property using bonus entitlement, close on that, and not have to sell their current property or rent it out until after this closing, and we don't have to count it in their debt to income ratio. That's huge. Seller concessions, as I mentioned a while ago, I touched base on it. The seller concession, seller can pay a lot more than you think. Tricks to lower the VA funding fee, anywhere from 0 to 1.25, 1.5, all those kind of things, 2.15. Multiple borrowers that have VA benefits, how you can work with that. Down payment assistance is eligible with VA loans and others. Full entitlement, no VA loan limits. And we've closed loans up to $1,975,000 lately with no down payment. One spouse occupying the property while another one lives and works in another state. That is allowed. Again, most will not do that, even though VA allows it. And then transitioning out of the military. So, for instance, I had someone yesterday. They're in the process of transitioning out of the military by January, February. So that income can't be counted. So, what kind of solutions are there for that? And we're going to talk about all those next week. And certainly, if you have questions in the meantime, don't wait for that. Or you want to learn something specifically, have an individual conversation, just reach out to me. So I want to thank you for watching this video. Thank you for supporting military veterans. And if you have questions today, down the road, or anything, just reach out and ask. I hope you have a blessed day. Thank you so much.